This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, March 8th, 2016. Euro dollar. So right now the key levels to watch above and below in the euro are 110.69 above, which is the high that we saw going back to the 26th of February, and 108.26 below, which is the recent low that we saw on the 2nd of March. At this point, a break above or below will be required for the next clear directional insight, but overall, following this most recent breakdown below 110, the bias does favor a lower top and fresh downside below 108.26, which would expose 107.11, the 2016 low, and then that critical 105.21 base from December further down. At this point, only a close back above 110.69 would force a shift in the structure and suggest that the market could be poised for additional upside. Sterling dollar. So although we've seen an impressive recovery in cable over the past several days, the market is still confined to a broader downtrend and should be looking for a lower top ahead of the next major downside extension below that recent 7-year low at 138.36 and towards a measured move objective at 135 further down. It's worth noting that 135 also coincides with the multi-year base from 2009. At this point, only a break back above recent highs around the 144 area would take the immediate pressure off the downside. Dollar yen. So dollar yen is confined to a consolidation, which is right now classified as a bearish consolidation as the market trades below previous support at 116. At this point, look for the possibility of fresh downside below the recent multi-month lows at 110.98, which would open the door for the next major downside extension, exposing the 107 area further down. At this point, only a break back above 116 would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to show how well it is supported on dips, with the market confined to a broader recovery structure and looking poised for an eventual retest and break of the recent multi-month high at 112, heading towards 115 further up. At this point, any setback should continue to be well supported on dips towards 107, with only a break back below 107.15, the multi-week range low, to really compromise the overall constructive outlook for Euro Swiss. Aussie dollar. So we've seen an impressive rally in Aussie over the past several weeks, with the market trading up to fresh 2016 highs and into some critical medium-term resistance around 75. The next key resistance point comes in all the way going back to the 6th of July of 2015 at 75.30. A break above 75.30 would open the door for a more significant upside. As you can see, this is where the market sort of consolidated before breaking down lower into this latest multi-week, multi-month consolidation. Again, the market would need to establish back above 75.30 to really force a potential shift, a medium-term shift in the structure, while inability to do so will suggest that the market could be poised for another bearish reversal back down towards the recent multi-year lows at 68.27. Dollar CAD. So dollar CAD has seen an impressive correction off that recent near 13-year high from January at 146.90, and it looks like this correction could be coming to an end as the market trades all the way back down into the 132s thus far. There's a critical 78.6 fib retracement off the October 2015 to January high move, which comes in at 132.30, and ultimately setback should be well supported around this level in favor of the next medium-term higher low and fresh upside extension. Kiwi dollar. So Kiwi continues to show signs of being very well capped on rallies, with the market holding below some medium-term resistance at 69. While the market holds below this level, look for any rallies up towards it to be very well capped in favor of resumption of declines. A break below 65.46 will strengthen the bearish outlook and expose more significant medium-term support at 63.47 further down. SPX 500. So the impressive recovery rally in the S&P 500 over the past several days looks like it could finally be poised to stall out in an ideal lower top zone in the 2000 to 2025 area. Look for the market to put in this lower top in favor of the next major downside extension back towards and eventually below the recent multi-month lows from this year at 1808 and towards a measured move in the 1600 area further down. Only back above 2025 would really take the immediate pressure off the downside. Gold. So gold continues to retain a constructive outlook following the recent break back above the 1200 area, signaling a significant multi-year base potentially in place now at 1046 from 2015. At this point, the focus now is shifted to a retest of the 2015 high from January of 2015 at 1307 further up. Any setback should be very well supported in the interim ahead of 1200, while only back below 1192, some previous resistance turn support, would take the immediate pressure off the top side.